I think we're already seeing a little bit of maybe the inklings of the depression phase coming into Bitcoin. I think the reason why I don't think we're fully in depression mode yet is because the markets and investors are still hanging their hat on this BlackRock spot ETF. But what happens if Bitcoin gets that approval for an ETF in October, let's say, and it pops and it doesn't take out the 31,000, 32,000 high?
Amid all the ongoing uncertainty, Gareth Soloway and Ben Cowen delve into chart analysis and discuss the regulatory concerns facing crypto in the U.S. The uptick in crypto prices came as the industry looked past SEC's latest delay of a spot Bitcoin ETF and Chase Bank's ban on crypto payments for its UK customers. With regulation still a big talking point, analysts have predicted a potential setback for bulls before prices steadily climb with a new bull cycle. The Securities and Exchange Commission continues to postpone its decision on a spot Bitcoin ETF. However, October might bring the clarity that fund issuers and the crypto industry have been eagerly seeking. The deadlines to next rule on, or postpone a ruling on those proposals, fall between October 16th and October 19th, with the ultimate clock expiring in mid-March. According to Soloway, the approval of this ETF is expected to trigger a substantial increase in price. Bitcoin is witnessing a tough battle between the bulls and the bears near the 20-day exponential moving average. The bulls pushed the price above the 20-day EMA on September 27th, but could not clear the 50-day simple moving average at $26,757. This indicates that the bears have not given up and are selling the rallies to the 50-day SMA. By drawing parallels with the last market cycle, Cowen mentions that in the previous cycle, after Bitcoin fell below the 20-week SMA and the 21-week EMA, it encountered its initial rejection when attempting a backtest. Let's direct our attention towards the few clips from discussion.
That's going to be some crazy stuff. So, I mean, I think we're already seeing a little bit of maybe the inklings of the depression phase coming into Bitcoin. I think the reason why I don't think we're fully in depression mode yet is because the markets and investors are still hanging their hat on this BlackRock spot ETF. And one of the things I was saying about this ETF is I do think it will create a pop, right? I mean, just like the rumor of it when they first filed, just like the Ripple news, the Grayscale news. But the question I would have, and this could be the backbreaker for crypto in the near term, but to make a bottom. And again, just to be clear, Ben and I are both long-term hugely positive. But what happens if Bitcoin gets that approval for an ETF in October, let's say, and it pops and it doesn't take out the 31,000, 32,000 high? So everyone that I know, and again, I'll flip over to my charts, you know, they're basically hanging their hat on, oh, don't worry, because at some point they'll approve it, and then we're off to new 52-week highs. What happens? I mean, again, what kind of pop are we expecting on that news that a BlackRock spot ETF has been approved? Like, are we really going to see it go above 31,800 here? Or does it stall out prior, and then do we see it kind of retrace back down as that depression phase kind of escalates? And would that add to a depression phase, in fact?
Yeah, and I feel like with the whole news stuff, I mean, and I know you're a staunch believer of this as well, but like, to me, it certainly seems like narrative follows price, right? Like, right. People always like to explain why the price went somewhere after it occurred. But I think the bigger issue with the narratives is, like, if the narratives mattered so much, to be such a huge fundamental change for the market, after the Ripple SEC news, why did XRP completely retrace the entire move, right? Why did many altcoins go on to put in new 52-week lows if this sort of this court case, if it meant so much to the altcoin market? And I think the reason is because the narratives don't really matter right now when, as you pointed out earlier, the DXY is in the 11th green week in a row, right? And we know that total 3 is more so a function of excess liquidity than it is whatever the most recent like prevailing narrative is, right? Like just looking at this net liquidity model, it follows it almost identically for basically ever since March of 2020. This move is almost identical. I mean, they're essentially the same chart, and I think the reason is just simply because people look at the altcoin market, and that's where excess liquidity goes, right? It's where all the excess money that they have that they just want to spend somewhat frivolously, try to take on more risk. A lot of these people put into the altcoin market, but as this keeps going down, the altcoin market keeps taking a hit, and that I think is what's more important. And I to just say one more thing about Bitcoin, because I thought what you said was interesting. If you look last cycle, actually, what we ended up having was after Bitcoin sort of fell below the 20-week SMA, 21-week EMA, we actually got our first rejection off of it. Like our first back test was rejection, potentially seeing that same thing here as well. And I wouldn't be necessarily that surprised if we do eventually get a rally into a recession that might come on the back of a spot ETF approval, but you might actually take out that June low first, right? So like back over here, we actually took out the June low and then we rallied into the recession in 2020, right? So like we could see an example like that where you just get rejected here by that 20-week SMA. You go down to say 22, 23, 24K. I think I've said 23K before. And then maybe from there, you get some type of rally into a recession, only for it to then go and put in whatever the final either higher low, double bottom, or lower low is.
Polygon bounced off the critical support at 0.51 on September 25th, but the bulls could not push the price above the 20-day EMA. Cardano bounced off the vital support at $0.24 on September 25th, but the bulls are struggling to push the price above the 20-day EMA. Soloway notes that the recent trend in Matic presents an opportunity for an upward move, while Cardano's pattern indicates an imminent breakout, with potential directions either upward or downward. In the conversation, Soloway underscores the significance of disciplined trading and investing. This involves setting clear stop losses, avoiding greed, diversifying assets, and employing position sizing to effectively manage risk. These principles are essential for navigating the volatile cryptocurrency market. Let's direct our attention towards the few clips from discussion.
I'd be curious to know what you think about, like where do you think Matic is right now? Cardano, Polkadot, Matic,
yeah,
not even that far above the June 2022 lows.
Yeah, so I'll bring up the Matic chart. We can take a look here real quick. And the only thing I would just point out is that we have crept above this down sloping trend line, and we're still holding this white trend line right through here. So what that does is it helps free price where it gives it the opportunity to get a bid. Now, again, this is very short term, but the one thing you would have to monitor, like, this is where risk reward and discipline come to play, where you could say, okay, I'm going to take a shot on Matic here, right? But if it breaks this white trend line and closes basically below 50 cents on a daily, you need to stop out. And the beauty of that as a trader is that when you have a very defined stop, that it starts to say, you start to say, well, even if my win ratio is only 60%, a little bit better than 50-50, because my loss can be so minimal, it actually starts to look interesting. So again, I don't know if this will have a move to the upside. I do think the chart has that possibility. But again, having a defined stop here is really, really good. And kind of the same thing for Cardano here. Cardano's into this unbelievably tight wedge pattern. I mean, you don't get much tighter. It's going to have to break one way or the other. And the same thing could be said is, if you break basically below 23 cents, you exit. So you're risking a penny and a half to potentially, if it does break out, I mean, again, where would it go? Maybe 28 cents, maybe 30 cents in really an amazing scenario. But I do want to say that I think that we still have downside to go in crypto. So any sort of pops should be used to sell into, right? Don't get greedy. Like so many people, and this is one of the common things, is we get in the money and then we start to see the dollar signs in our eyes and we're like, oh, but if it goes up here, I'll make this much. Oh, and if it goes up here. And what ends up happening is people end up giving back their gains. And so whether you dollar cost average in, you can do the same thing on the exit. Dollar cost average out, take a little bit off the table, let it run a little bit more, a little bit off. And what that does is it enables you, like, let's say I have a full position and it pops and I take off a quarter. Now, if I'm incorrect and it still runs higher, I make money on the 3/4. If it pulls back, it gives me the option to re-add and actually help my overall dollar cost average on a position that maybe the thesis is still intact with. So there's lots of maneuvering here. And I always hope people understand that, you don't have to be all in. You don't have to be, all out. There are ways to mitigate risk. And that's one of the biggest things for traders and investors is it's why we diversify. And we should be doing that in multiple ways, not just with like real estate and stocks and commodities and crypto, but also diversify with when you start a position. It doesn't mean you have to go all in because, again, there's risk to doing that. So anyways, my sermon there for traders and investors is over.
Bitcoin managed to stay above the $26,000 level even as the S&P 500 tumbled to a 3-month low and the US dollar index rose to a new year-to-date high. Low liquidity could lead to volatile moves in either direction, hence traders should be careful and wait for confirmations rather than taking positions on every intraday breakout. That wraps up our conversation for today. Feel free to share your thoughts in the comments section below. If you found this information valuable, please give it a thumbs up and consider subscribing to our channel to stay informed with the latest news and videos. Thanks for joining us.